if I told you that getting funded isn't the goal? It's only the first test. Anyone can pass a challenge, but keeping the account and getting consistent payouts, that's where most traders fall apart. I blew multiple funded accounts before I made a single dollar from the market. Not because I didn't know how to trade, but simply because I did not know how to manage my money. I used to think you need to hit 10K days to be a profitable trader, but I simply did not know how to walk away. Now, I'm withdrawing $80,000 to $100,000 just by compounding small wins. And I'm gonna show you exactly how in this video. Because the secret isn't just passing, it's staying funded. Now, let me show you exactly how I do it. Okay, what I'm gonna be sharing with you is exactly what you see in front of you. How to make so much money using this one formula. I mean it. How you can make $80,000 to $100,000 per month trading just funded accounts. So if you can see what I'm sharing in front of me is, I want you to just start with one account, just one, okay? You pay around $1,000 to get access to $200,000 in capital of any funded account. Now it could be a plus or minus. Some funded prop firms say $900 and some of them is like $1,100, but you know, varying in that range. The thing is, you don't need a lot of trades. You don't need 100 trades a month. You don't need to trade every single day. Just withdraw 2% a week. And what that means is that's $4,000 per week from one account. If you take, let's say, for example, if you take 2 trades a week, risking 1% on each, if you want to do the math on this one and you're risking 1% of the $200,000 that you have in capital. This $200,000 risking 1% would lead to you risking $2,000 per day. Not even per day, it's per trade. And so this $2,000 in the grand scheme of things, it's $2,000 off of $200,000. What you need to understand is if you're risking only 1%, you're approximately gonna need to lose 10 back-to-back trades to breach your account. And if you're making $4,000 a week, let's say you take 2 trades and you win one, but you lose the other one. So in total, if one wins at a 1 to 3, which is my minimum risk to reward, and one loses, you're up 2% for the week. So if you want to do the math on this one, and we're risking 1% on each trade, one wins at a 1 to 3 and one loses, you're up 2% for the week. Done. You don't need more than this. I'm saying 2 trades a week. 2 trades, one that ends in a minus 1% and one that ends in a 3%. Ends up to a 2% total gain for the week, which brings us back to the $4,000. Now imagine doing the same thing with 5 accounts. $4,000 times 5 is $20,000 per week, and that's $80,000 per month. That is only you chasing a minimum 1 to 3 risk to reward trade, and you never ever risk more than 1%. But can you imagine if you catch a high RR setup, which means a 1 to 10, that number explodes. You secure your partials at 1 to 2 or 1 to 3, moving your stop loss to break even and still leave a runner. Let me explain this in trading terms. You start with a 1 to 3, but then once price reaches the 3 mark, you close that partial and you move the rest as a runner. What I mean is that 1 to 3 is already secured because your stop loss is now situated at the 3 mark. So should price go back down, if you're in a buy position, you leave at the 3% gain. So this is locked for sure. But if 1 to 3 and you have your stop loss situated at the 3, but then the trade goes on to a 1 to 10, you now have 10%. Now, I'm not saying this 10% is gonna play out every single day of the week, but in 4 weeks, you're probably gonna catch 1 to 10 RR. So 10% of the $200,000, that is $20,000 in one single trade. It seems like it's a lot, but once you get used to the numbers and you have multiple accounts, you're only making that same $4,000 times 5. And if you get this 10%, you're making $20,000 times 5 in one single trade. And yes, 1 to 10s are normal if you're patient and precise. This isn't about overtrading, it's about taking clean, high quality trades with proper risk. So that means you never go above the 1% at all. Trading is about you limiting your downside and not even thinking about the potential upside. If you're trading and the trade becomes hopeful, this is very bad. You are in the wrong already. What you need to focus on is funded trading is the biggest opportunity most people sleep on. I mean it. Most people lose because they treat this like a lottery, not a system. They just full port the whole account, or they over leverage, for example, or they revenge trade, or they think that the market is against them. But simply the market is a reflection of you and your own discipline, nothing more. Again, you're not here to feel adrenaline, you're here to execute a plan. Also, if you master your patience and you master your discipline, that's exactly how you win with funding. Your edge is not the setup, it's your ability to wait. Real traders don't chase at all, they calculate, they wait, and they collect. I know, it seems like it should be more complicated than that, but this is everything that you need to do in one page. Now, if I want to go down and focus exactly on how I would want you to start, I would say get one account. So I'm just doing a total recap. Get one account and then pass that one account. Again, you're chasing a 1 to 3 setup only. So that 1 to 3 setup becomes a 3%. But if you add these 3% plus 3% plus 3% plus 3%, that means over here, you've already passed your evaluation phase. Now, you only have to be consistent, focusing on 1 to 3 trades per week, okay? If you master these 1 to 3 trades, let's say you take a total of 2 trades like we spoke about earlier and you win one, yet you lose the other one, that's a total of 2%. If you focus on this consistency only, you don't need more than that. I'm telling you, 2 trades and you get the rest of the day off. You can go to the gym in the middle of the day. You can do whatever you want. You can focus on your side business. You can focus on growing as a person, optimizing your mind, optimizing your body. And this is what I advise you to do the most. Less is a lot more in trading, not just more. Because if you're able to secure a 2% on one of these accounts, that means in 1 month, only in 1 month, you're going to be able to secure $16,000. And then what I want from you is these $16,000, just take 1,000 off of them. And this 1,000 gets you another 200,000 account. And the beauty of it is it's compounding, it's doubling. So when you have 2 accounts that have $200,000 in capital, that's $400,000 in capital. Take the same 2% the next month, and guess what happens? These $16,000 become $32,000. Not just that. Out of these $32,000, what I want from you is take $2,000 off and get another 200K account. What I mean by this is you're not now trading with $400,000, but you have 4 200K accounts. So this is 800,000 in capital, and you still follow the 2% rule. So this 32,000 is now times 2, so it's 64,000. Get one more account and you hit the 80K to 100K mark. That is all that I have for you. Now, if you like this video, just let me know in the comments, and what I'm gonna do is I'm gonna share with you the next video where you can exactly target the 1 to 3 at full volume to start. So what I want in the next video is to show you that if you only focus on the 1 to 3 high probable setups, so high probable setups, you're gonna be able to understand that it's not that hard, and you're gonna be able to stay a lot less in the market, making so much more money than anticipated.